What was your biggest takeaway from the announcement? Because there was lots of interesting parts, the outlook, but also how fast that they grew, and now they're kind of paying for it, which I feel like encompasses this easy money policy era that's ending.
And on top of that, where the money comes from, Coinbase is publicly traded, right? So at the end of the day, what is the expectation of return for not just Bitcoin and crypto investors, but anyone that invested in crypto companies that are then related to this crypto downturn more largely? The other thing I would say is that remember how many people have left Wall Street to join these firms. So it does start to put pressure not just on the market itself, but also on the job market here after you've seen so much competitive pressure.
Is this good news for Wall Street or bad news for Wall Street?
You know, I've been thinking about this a lot, Guy, because just a week ago we published a story with Adena Friedman, the CEO of NASDAQ, saying one day we have the technology that exists for every asset in the world to be digital. And so you have to wonder with what's going on in crypto right now and the shakeout you're seeing, some of these projects just won't exist. A lot of these lending protocols can come under serious regulatory scrutiny. But if every asset in the world can be digitized one day, then what are the types of projects that make it through today? And I think that's where a lot of people are placing their bets. At some point, it's like any other market. When there's capitulation, the number of people who are still in the market might have some winning bets here.
But in terms of the Wall Street problem, and they were like bleeding workers and they have to be really competitive now, did those people then go back to Wall Street? And does that kind of ease the labor tension there a little bit? The other story about crypto in the last 24 hours was the liquidity issue. I read some stuff about margin loan calls, et cetera. What are you hearing on that front?
Yeah, and that story in particular is in relation to MicroStrategy because the firm's president in May said that Bitcoin needs to be cut in half to around 21,000 before we'd have a margin call. Again, they can still avoid that. I think something else that's interesting is more firms and certain specific Bitcoin lending firms have taken Bitcoin as collateral. So what does that mean when Bitcoin is plunging so aggressively? How much more do you have to post in that kind of scenario? And how much does that model continue on? Will other banks start adopting it if they can make it through this really significant downturn?
Sonali, you talk to a lot of people on Wall Street. What are you hearing? Yesterday felt like a day when liquidity pockets started to appear. We saw liquidity drying up. What are you hearing about what's going on trading desks?
I think one thing that's really interesting, Guy, because liquidity has really been the hot button issue here. Who is going to step in to make markets when the market just is so different than it was 10 years ago? Remember when Jamie Dimon had made that hurricane warning? The other thing he said at that time was that he was worried that, you could see in 2008 type forced selling issue here, and the banks aren't around this time in the same way they were in 2008. They are just different in terms of what their scope is. What I hear from investors, talking to a very large credit investor last week that was saying that the depth of the market was just very narrow. There weren't a lot of buyers by number, and a lot of them are still not ready to get in yet. They expect that spreads might widen further later this year. You're not seeing it a lot right now, partially because issuance has been down so much. So let's see if that turns out to be true.